Hello, everyone, where we discuss basics of product management and a lot more. I'm Sonupam. I have more than a decade of experience into product management. Predominantly, I've worked with the fintech industry. So I do have a lot of knowledge around that, how this industry works, how do the products work within India, outside of India, more globally, right? Um, in this channel, what you can expect from the videos that I will be hosting would be to cover basics of the fintech industry. We will be taking a greater look, a deeper look into all the fintech products, right? Whether that be credit cards, debit cards, prepaid cards, loans, insurances, so on and so forth. We will try to understand how does money making really work? How does money really exchange hand by virtue of these products? What are the core industry players involved? What do the market trends look like? What does the market size look like? And a lot more. Apart from that, since I work predominantly in the enterprise space, I will be covering concepts or my experience working in enterprise product management, focused around the consumer side. And also, we'll be doing a lot of fireside chats, right? I'll be inviting people to come talk about the experience into product management. How did they make their first step into this area? How well are they doing right now? And what are some of the core frameworks or core principles that really help them excel at what they really do? So, with that background, I want to get started with the very first session where I want to basically cover in high level details of the credit card industry, mostly focused around the Indian market, but also calling out a few trends that have enabled this big shift in a developing nation like India, right? So, how big is the credit card market in India, right? Credit card is essentially that plastic rectangular card that we all carry in our wallets, and it essentially enables us to be able to make a purchase at point of sale, right? So let's say tomorrow I step into a mall, I don't need to necessarily carry cash in my wallet. As long as I have that credit card in my wallet, I can rest be assured that I will be able to make most of the transactions, whether that be shopping, whether that be at a restaurant, any other needs that may so be called out, right? As you would understand, for a credit card to work, it's not mandatory for the card to be physically present. You can also make a lot of online transactions as well, right? So, for example, tomorrow if I want to purchase something on Amazon, I can simply enter my credit card details along with the CVV and the OTP. And once the transaction gets authorized by relevant players in the market, the transaction will go through and voila, the purchase would be made. Right? So that is how a credit card really works at a high level, right? What we see as a user, how it really works. Obviously, back end pay, lots of players are involved, right? And these players have their niche role in terms of enabling the authorization of a credit card transaction whenever this card is swiped at point of sale. Right? We will be planning out a separate session where we will talk about all the players involved throughout the journey of the credit card cycle, right from issuing a credit card to working around authorization of credit cards, also working around how does the payment of credit cards really work, right? In this session, I want to keep it very high level. And I also want to call out how big this industry has grown in the last 5 to 10 years, right? So today, if you talk about the credit card industry, there are almost 8.5 crore credit cards in circulation, right? And this data is as of April of 2023, right? So only about a few months ago, almost 800 crores credit cards are there in the market. Now, as you would understand, typically one person may have more than one credit card, right? So 8.5 crores is not the unique number of people who carry credit cards, but 8.5 credit cards exist in this market, right? What is slated is that by end of the year, right? So imagine in just about another 3 quarters, we are expecting this number to go up to almost 10 crores, right? So you can imagine the kind of growth that this industry has taken into account, right? And day by day, how many credit cards would be issued by the different financial institutions. Now, these are the numbers for India, right? Globally, these numbers are going to look a lot bigger, right? Typically, the entire concept of credit is a very mature market in the Western nations, right? So if you talk about the United States, this number is going to look a lot higher. And the reason for that is that credit cards as a product has existed in this market for a very long time. And not just that, even people are more attuned to understanding how this product works and also leveraging this product to be able to, fund their day-to-day needs, right? In India, it is still a maturing concept. people are still getting to know about this product, how this product works, and also I would say being okay with the concept of purchasing things on credit, if I can put it that way. What really led to this big growth of credit cards in a developing nation like India? I would say one, it is definitely driven by the millennials, right? Who are more attuned to adopting newer technologies, newer products, right? And through them, they're also making aware, people around them, their colleagues, their friends, their parents, their relatives, their cousins around how this product works and how it really enables them to be able to make purchases. The second thing I would say is a growth of digital market in the Indian context, right? So today, if you wanted to apply for a credit card, you can do all the steps right from application to doing the KYC to getting it at your house, right? You don't really have to visit a branch in order for you to be able to get a credit card successfully, right? So the entire emergence and of technology as well as of digital India has really led to this growth, wherein which issuance of credit cards has become a much simpler process. I would say even things like KYC has become much simpler, wherein which, back in the days you had to be physically present at the branch where, you would be required to give your verification documents, maybe get an image clicked, do signatures, right, like physical signatures. Now, almost all of this can be done on an online portal, right, where through, a portal you can simply upload your verification documents like your Aadhaar card or your PAN card. You can also get your image clicked, real time, and you could leverage digital signatures in order to be able to provide consent to the fact that you're applying for this card, right? So the second big driver which has led to this phenomenal growth is actually the emergence of digital India. The third in my mind, I would say, is the overall inclusion and enhancement of the financial infrastructure in this country, right? Now, what do I mean by that? You would have seen the great impetus that the government of India has placed on things like UPI payments, right? Emergence of wallets, and also enabling banking to reach out to remote areas of the country, right? So this entire shift, when which new regulations and laws have been made, so that a lot of the steps when it comes to getting access to any financial product, not just credit card but other financial products also via digital channels, as well as being able to reach out to tier 2, tier 3 cities through these mediums, has also led to this entire growth, right? So in a recap, right, what has really led to this phenomenal growth of the credit card industry in India, I would say, is the millennial population, right, and how it's a big chunk of the entire population of the country. Second, I would say, is the entire emergence of digital India. And third is going to be the impetus that the government and the regulatory bodies have made on making sure that we have a very robust financial infrastructure, and we continue to invest in it to be able to include more and more people under the gamut of different kinds of financial products. How big is this industry when compared to the global trends? We will be covering in a later slide. But for now, I want to leave you with the fact that almost around 5 to 10% is the rate of growth of this industry annually. And we expect that this rate will remain pretty much consistent till the end of 2030. Right? There are a lot of studies and reports conducted by various secondary channels, and they are pretty much consistent. And I have a very robust, I would say, bet on the fact that this industry could continue to grow for the next 7 years at a robust rate of anywhere between 7 to 10%, right? So more credit cards to come along your way. Let's also understand who all are the key players, when it comes to credit card products, right? Typically, your financial institutions are going to be the key players who actually act as like, credit card issuing entities. If you actually see this landscape is for India, and the screenshot I've taken from FinShots, right? You will be able to see the overall, who are the key players in the market and what is their percentage contribution to the credit card industry, right? Now, obviously, you look at a number of around 7.7 crores here, right? This number represents the total credit cards in the market. If you actually see it, then this is the data provided by RBI as of September of 2022, which is why this number looks a little bit lower than the 8.6 crore number that I spoke about earlier. Anyway, the important point here is not the actual number, it's actually the percentage distribution, right? The percentage of contribution of different financial institutions towards this number. High level, what you'll be able to see is that there are, I want to call out 4 key financial institutions or banks which contribute to almost 70% of the total credit cards being issued in the market, right? So it's a very lopsided kind of a market where you can literally call out few key players and everyone else are like very small players in the entire gamut today, right? Number one being HDFC. So HDFC is almost contributing to 1/5 of the total credit cards in the market, right? So it's at about 21%, right? Almost 1.6 crore credit cards of HDFC in the market. Second one, if you actually take a look at this diagram, it's going to be SBI, so State Bank of India, almost contributing to 19%, right? It's towards the left side of this diagram, so almost 1.4 crores. SBI also targets a lot of tier 2, tier 3 cities, right? Which is a stark contrast from something like an HDFC Bank, which is typically their credit cards are a little bit more premium, right? With your Diners Club and Infinia, which do target people who come into the high salary bracket. So I would say that's a very good contrast in terms of different kinds of financial players in this market. Third, as you can see, is ICICI Bank, right? So almost 1.3 crores credit cards in the market. Again, these can be across all the different credit cards that ICICI has to provide, right? Some of them could be in collaboration with certain partners, for example, Amazon. Others one could be like proprietary ICICI credit cards. We'll get into a little bit deeper details of the different kinds of credit cards, that are issued by financial institutions. Typically, there's not just a single credit card product that this bank will actually have to offer. They will have an entire portfolio of credit cards to be able to service the different kinds of needs of its end consumers, right? The fourth one, if you actually take a look at, is going to be Axis Bank. So at almost 88 lakhs, right, contributing to 11%, right? So to be honest, I would say HDFC, SBI, ICICI are pretty neck to neck. The next key player is Axis. If you take a look at the entire gamut of other players in the market, right? For example, whether it's Kotak, whether it's Yes Bank, IndusInd Bank, I can see a few other names like Standard Chartered, Citibank, American Express. Those are much smaller players, right? Contributing to anywhere between like 5 to 20 lakh credit cards in the market as we speak, right? It could be because they have, I would say, a smaller portfolio of the credit card products. It could also be the case that their, vision statement is towards other lending products, or just the fact that their market of interest is not like for a lot of international players like Citibank and American Express. Maybe their market to focus on is not so much India as of now. It's a little bit more global, and which is why they are taking it step by step in this market, right? But high level, I think it's important to understand that there's a disproportionate contribution of the overall, credit card market when it comes to, the fact that, lead four banks actually contribute to almost 70% of the total space, right? And there being other very small, almost 15 to 20 other financial institutions still having a hand in this market, but at a much lower rate. Let's keep going, right? How big is this market globally? Like I said, this concept of credit and credit products, right? Here I'm not talking about credit industry. In general, if you talk about the concept of credit, is extremely mature in the Western markets, right? So if you were to take a look at some of these estimates globally, right, for the credit card market, it could be, having a total market size of more than $100 billion, right? And this is US dollars. And this is as of the end of 2022, right? We are still in 2023, so we don't have the final numbers of 2023 yet. But at the end of 2022, this market is almost $100 billion, right? Again, it is expected to grow at a cumulative annual growth rate of anywhere between 5 to 7%, right? So this is one of the fastest growing markets. And what does this really tell us, right? This really tells us the fact that there is need for credit in the market, and this need is going to sustain And if anything, we can expect it to become bigger, with the coming months and with the coming years, right? And again, if you actually think about it, the key two trends which are helping the Indian market grow in this sector, those same two key trends are actually going to help, the global market also scale up, right? One, you will have this entire generation of millennials who are more active, who are more interested in understanding and knowing about different products, right? They don't have the inertia towards trying out different products, and they are going to be the forward leaders in terms of the new credit cards which are going to be issued in the market, right? So that is one. The other thing is obviously the entire impetus around making credit easily available to people, right? Because people understand that for an economy to grow and develop, exchange of hands of money is extremely important, right? The more exchange of money happens in an economy, the faster the economy will grow, more jobs will be created, more businesses will flourish, right? And to enable that growth, right, we need to have credit products in the market and make them readily available to everyone. Now, how much credit should be offered per person, that can vary, right? That is a separate topic for us to know that, okay, what is the risk worthiness of a person, right? Or how much credit should be exposed to an individual, right? That is a separate topic. But in general, the availability of credit, through channels that make it easier for credit to be available to individuals is actually going to enable different industries, different markets, different businesses flourish in the future, right? Which is why you will see new and new players coming into this market, new and new credit card products coming into the market, and new industry trends around credit cards coming up, right? What do I mean by that? So you would have heard this term of prepaid credit cards, right? You would have heard the term of virtual credit cards, right? Some of these are innovations in the credit card space which have literally happened in the last few months, right? And the reason why they have happened is because, people have realized that under different circumstances and for different user segments, the same product will not work, right? So we need to constantly innovate on this product, add in more features which are relevant to the user segment of interest, right? For example, the concept of virtual cards, right? If you actually go back to the pre-COVID era, while the entire issuance of credit card can happen digitally, right? Like I said, you can go online, you could go to, let's say, ICICI website, you can say that you're interested in XYZ credit card, you can start with the application process. From a KYC standpoint, you can definitely upload documents, your Aadhaar, PAN card, all of those documents, you can upload your image and you could go ahead with a digital signature as well, right? So which means that your application form is complete. Having said that, there's an important step wherein which, because your credit cards are still very much like a physical entity, the card needs to be dispatched to the end user's home, right? Now cut to 2020 where we were amidst COVID, right? These entire dispatch services, let's say by your logistic companies like Blue Dart, etc., was also on hold, right? There was literally no movement of any goods or services happening in the economy. Obviously, essential services were happening like groceries, medicines, but things like dispatch of credit cards was not an essential service, right? So then how are you supposed to still, issue credit cards and still show that, you have more and more consumers looking out for your product? So that was the period when people came up with this concept of a virtual credit card, wherein which dispatch of credit card is not mandatory. Once the credit card is approved and once the credit limit is decided basis the credit worthiness of the individual. Now, I am continuously saying this term credit worthiness. What it basically means is that what is the credit limit that I'm okay to give to an individual, right? For someone who's earning really well, has a backup of good educational background, also has been able to make a few assets like house, car, etc., is roughly in their 30s, I'm probably okay to give a much higher line of credit as opposed to, let's say, fresh, college graduate who hasn't started earning, definitely has completed a degree but is still new, still looking out for their first big job, right? For a heavy pay slip, so on and so forth. Maybe I'm not so comfortable giving like multiple thousands of lines. Maybe I would want to start with like a 10,000 or a 15,000 line, as opposed to the first user persona where I could even go up to a few lakhs, right? Because I've built that amount of trust with the individual to say that since you have very stable inflows and outflows of cash into your bank account, I can, go a little bit higher, and I can take that leap of trust in you, ensuring that you will pay back, up to a few lakhs as well, right? So that high level is credit worthiness. But again, like I said, we will need detailed sessions to be able to carve out the true, I would say, definition of this key term, right? Anyways, going back. So in the COVID period is when I would say, the emergence of the concept of virtual credit cards came in, and it also really boomed because it solved for a key bottleneck in this entire process, right? Which is the physical dispatch of cards. So I would not have a card which I need to dispatch. It would just be like an image of a card where your key details around credit cards and CVV, etc. would be provided, but not in a physical format. It would be like a PDF, or it would be just like numbers which you would know. It could work like a scanner. And that is what you can use to be able to make any transactions, either online or offline, right? So that is how a virtual credit card works, right? Similarly, a few other innovations also came up in this industry, and it's basically to be able to keep trend with the changing user needs and demands, right? One of the things as a product manager which you will understand is that you have to really get down to the nerve of your end users, right? You have to really be able to understand the characteristics and the behaviors of your end users. The better you can get to that, the better kind of analysis you can actually do in terms of, what kind of next features need to go into your product versus what features are no longer valuable for your end users, right? One of the core aspects of a successful product manager is going to be understanding the voice of the customer, right? That is that around the global industry trends of credit cards. I do want to spend a couple of minutes covering the different kinds of credit cards in the market and also few key terms associated in this space, right? Typically, you can divide the different categories of credit cards into consumer credit cards and commercial credit cards. Now, what do I mean by that? Consumers are people like you and me who want to use a credit card to be able to, purchase their, let's say, daily or weekly needs, right? Daily could be things around groceries, maybe rides, like cab rides that we may take at Ola, Uber, etc., right? And obviously weekly needs, our lifestyle is such that at the end of the weekend we probably want to meet our friends, go for a movie, go eat in a restaurant, go to a mall and do some shopping, right? So our needs in terms of the places where we shop, or rather the merchants at which we want to make transactions, as well as the amount of transactions that we would like to do in a month, are going to be different, right? Maybe a few thousands to about a few lakhs, depending on which income category and what kind of expenses do we have in a month, right? Vis-a-vis a commercial credit card, right? Commercial or a business credit card. What do I mean by that? So let's say I'm a small business owner, right? I run a cloud kitchen, and I'm listed on Swiggy and Zomato, and let's say I have my own delivery channel as well, through which I'm delivering to, let's say, residences in a 5-kilometer radius, right? Now, for me to be able to operate this as a business, right, where let's say I have 5 to 6 employees who help me cook and help me deliver, right? And I need to get the groceries for bulk orders, not like regular kitchen cooking for like 3-4 members. I need to have groceries, I need to have the setup, right? Kitchen appliances for bulk orders. So for me to be able to run as a business, my inflows and outflows of money are going to be very different, right? The magnitude of those inflows and outflows is going to be different, right? It's at least going to start from a few lakhs, could go up to multiple lakhs, right? That is one. Two, even as a business, my risks are going to be different, right? As an individual, typically I can determine my risk basis my salary. So as long as I have a stable job, I will have stable inflows and outflows of money, and through that I can determine, how much monthly expenditure can I do on my credit card. But when I'm running as a business, I am susceptible to even more risk, right? Any new regulation coming from the industry, any new competitor coming up into the market, right? Also, let's say any economical changes that may happen in terms of COVID coming, or any health barrier coming in will also impact the way that my risk in terms of taking that credit will hamper in the market, right? So that is one broad category in terms of consumer and commercial. Now, within consumer, I could have another two categories, right? One is my proprietary credit cards, and the second is going to be my co-brand cards. Now, what do I mean by proprietary credit cards? Proprietary credit cards are the ones which are only funded by the financial institution, and you will find certain offers, right? Let's say 2% cashback, 1,000 rupees is your annual joining fees. If you shop at certain places, you're going to get like certain discounts, but it's all funded by the financial institute only, right? Vis-a-vis when it comes to co-brand card, right? So I could have a co-brand, let's say, with an e-commerce platform. What do I mean by that? So on Amazon, you would have seen that Amazon has an affiliation with ICICI Bank and they have a credit card. If you use that credit card to make purchases on Amazon, then you get 5% additional discount irrespective of the transaction value. That's a co-brand card. What do I mean by that? So ICICI Bank has partnered with Amazon, has come up with a credit card where it has said that all transactions on the Amazon platform will get additional benefit, right? So that's a co-branded card with an e-commerce platform. Something similar, I think you would have seen on Flipkart, where they have partnered with Axis Bank. They have their own credit card. And if you were to use that credit card to make purchases on the Flipkart platform, again, you're going to get additional discounts, which if I were to make purchases through other modes of payment, whether that is cash on delivery, other kinds of debit cards, wallet payments, etc., I am not eligible for those additional discounts, right? So that's a co-branded card. I have come in partnership with another partner to give, extra or special benefits on transactions on that platform. Now, this other partner can be across different segments, different categories. Like I said, one is an e-commerce platform, right? So examples being Amazon, Flipkart. The other one could be hotels, right? Now, hotels is really big in the Western market, right? Where you have this chain of Starwood hotels, Marriott hotels, all of that. So we come in partnership with these hotels. And if you were to stay in those hotels, either for a business trip or a personal trip, you're going to get additional discounts on room booking. Another kind of partner could be airlines, right? Like you would have seen, the co-branded partnership with Make My Trip, right? Which basically says that if I were to book airline tickets on the Make My Trip platform, then again, I will be eligible for additional discounts. This discount could be a 5%, 10%. All of this math is worked out by the partners to be able to see what best can they do for their end customers. But the idea is that I understand that, when I do the user persona behavior analysis of my users, I can tell that, okay, I do have a lot of users in my portfolio who love to, book tickets. And if I could, if I wanted to tap into them a lot better or be able to get a lot of, the transactions not on a competitor card but on my card, I will need to do this co-brand partnership with XYZ. And if I'm able to do that, then, by virtue of these additional discounts, more and more people will come on my platform and I will be able to tap into all of those cash flows. So all of these are great examples of co-brand cards, great examples of partnerships. And who's the end benefiter of all of this? It's users like you and me, right? So if I do, if I am someone who loves to travel a lot, then maybe I will invest in one of these cards so that I can get additional discounts, right? There could be a few other examples of different, partners in the co-brand space, but these are the typical 3 ones, which will capture the majority of the industry. Across all banks' credit card portfolios, you will be able to see examples of consumer cards, proprietary cards, co-brand cards, commercial cards, right? Examples of proprietary cards could be like, for example, when it comes to the ICICI Bank, they have a coral card, they have a platinum card, they have a titanium card, right? So if you actually go through the portfolio of ICICI Bank's different kinds of credit cards, you'll be able to see these names. And these are proprietary ICICI Bank cards. They don't have any partnership with any third party for additional discounts, right? For additional dedicated discounts, I could say, right? On and off, they will run campaigns, etc. But that is not the definition of a co-brand card, right? A dedicated partnership where there's name sharing, right? Like some of the examples that I gave earlier, those are co-branded cards, right? With this, actually, this is what I wanted to cover in this session, where, just as a recap, we went into understanding what is a credit card, right? How big is this market in India? We did a compare and contrast of this market as well as psyche of the end users when compared to Western nations, and globally, how big is this market? We also detailed out in terms of the top players of credit cards in the Indian market. And lastly, we cover the different kinds of credit cards that exist in this space, right? So I hope you liked the session. I hope that you were able to learn something from it. What I would highly encourage, right, as a task for you all, what I would highly encourage is please go to the website of a financial institution, maybe an ICICI bank, maybe Axis Bank, maybe SBI Bank, right? The top three banks who are actually fueling credit cards. Go through their portfolio of entire credit cards in the Indian market and try to fix them into categories of consumer, commercial, proprietary, and co-brand. Right? I feel that would be a great exercise for you to go through it and also for you to be able to understand the difference and nuances of these credit cards. Okay, with that, I hope that you had a great fun-filled session. I will be filming a lot more sessions where we would cover concepts of product management. Like I said, we'll do a lot of fireside chat. We will do hacks in terms of how could you do a great job at your product management interviews, and obviously cover more concepts on the fintech space. Also, if you guys like the content on this channel, please do share, like, subscribe to this channel. Okay, guys, have a great day and looking forward to meeting you all in our next session.